Welcome to the Disruptor Network podcast.
Welcome back to the Disruptors Network podcast, and today we have a really interesting guest, Jeremy Harbour. He's the CEO and founder of Unity Group. Unity Group is responsible for over 300 mergers and acquisitions of other companies over the last 15, 20 years. Jeremy really started at 23 with his first purchase of a business. It was a telecom company, and from there he's continued to buy and sell businesses. He also has Harbour Club, which teaches other entrepreneurs how to buy businesses instead of starting a new business. So instead of a startup, he's showing you how to buy a business with no money. It's really how he started the business, and it's really, really interesting how he looks at business, and you don't need to be a startup company and go through all the pain of it. You can go buy a company for limited or no money and go from there. Besides that, he shows us how he's IPOing other companies over the last couple of years and bringing new companies to market into the publicly traded markets. It's really, really great information. It's very high level information, something you definitely need to hear. So without further ado, here we are, Jeremy Harbour.
Ignition. Liftoff.
Welcome back to the Disruptors Network podcast. We have a great guest today, someone who's very, very high level. And Jeremy Harbour, I talked a little bit in the introduction, and you've bought and sold over 300 companies at this point now, so which is amazing in itself. But welcome to the show, first of all. Thanks for coming.
No, thank you for having me. Very much appreciated.
You know, I read a little of your background, and I know your entrepreneur spirit kind of started early in life, but where are you from originally? And just can you give me a little bit of your background that way?
Yeah, absolutely. So look, I consider myself a global citizen. I've lived in Singapore for the last 12 years. I'm in Dubai at my home here right now. We move around quite a bit as a family. I have a young family, but I grew up in the south of England and lived in London for 15 years. And kind of cut my teeth in entrepreneurship over in the UK. You can probably gather that now. I've been talking for a while with the accent. I was the annoying kid at school that was always trying to sell people stuff, and so it really was, that was the kind of genesis of business. Really, my dad was a farmer. My mum had a beauty salon, and I remember I could work in either of their businesses when I came home from school or at the weekends, and they would pay me £1 an hour, which is kind of like $1.30 or something like that, that was a great motivator because I would do that and collect this money, but all the time you're thinking, how do I make more than £1 an hour? And so, clearly it was a great way of incentivizing me to figure out ways to hack that and to get a better return on my time.
Yeah, that's awesome. And I know even for entrepreneurship, I read that you started selling stuff to people in school at 13, and I did similar things, but at 23, you kind of got into telecom already early. Did you start your own business first before you started looking at other businesses? Then you figure out that this wasn't for you? How did you kind of get on this route to being an acquisition specialist?
Yeah, it was really random, and part of the acquisition thing really came about because I'd started a few businesses with varying degrees of success, screwed a few things up when I was younger, figured out a few things that didn't work. And then I started a telecoms company, and telecoms in the 1990s was going through this really rapid growth phase. So I think people had completely failed to predict how much of a game changer the mobile phone would be. And I seem to remember, at the time they were talking about a potential, total addressable market of about 3 million phones globally. And of course, we all know now that, the average in many countries is actually greater than the population. So, mobile phone penetration now is more than one phone per person. So it was the most astonishing kind of surprise that this market went the way it did. But what that created was an incredibly fragmented market. And what that means is that there are thousands of small players that pop up. And, during that time in the 1990s, pretty much every man and his dog had a phone business of some description or something related to phones or, things around that. And so what this meant is there were hundreds of thousands of small players. And then effectively over the next few years, there was a big consolidation phase as they all started to eat each other. And so it went from kind of 100,000 players down to a much smaller group of larger businesses where some failed, some were acquired, some merged, et cetera, et cetera. And it was that consolidation phase, because it was so rampant. I think it was an unusual industry in that respect. It was so rampant that there wasn't a week that went by where I wasn't approached by another telecoms company trying to buy me. So my education was having these meetings with people trying to buy me. So, in my mind, business for me had, a couple of different levers that you could play with around sales and marketing and team, and those were all the books were written about that stuff. All of the seminars were about that stuff. Everything that I learned from other entrepreneurs seemed to be about that sort of stuff. And now all of a sudden there's a guy sitting opposite me who's built a big company from buying loads of other companies. And it's clear that, what I felt was my biggest barrier to doing deals was that I didn't have any money. I felt that my challenge was, how do I pay the staff at the end of the month, not how do I go and buy it. So it wasn't top of my list to go out and splash a load of money on a company. But what I realized is these people that were pitching me, they didn't have any money either. They were in the same boat. So I just thought, like, shit, I need to be on the other side of this table. There is a way of putting a deal together that's a win-win for everybody, gets me what I want, gets them what they want, and doesn't require me to pony up loads of cash on day one. And so that's what I went doing. And I often describe it like the adolescent male in a bar trying to pick up a woman, like getting a few slaps around the face, getting a few conversations that kind of go okay, but don't go anywhere. And that was my kind of early days of trying to do M&A. And then I think, there's a high degree of luck. I think if you speak to any entrepreneur, there'll always be a moment of luck. But as I often say, you have to put yourself in luck's way. If you weren't taking the right actions, you don't leave any opportunity to become lucky. I luckily came across this telecoms company that had a number of motivations that needed them to get out of that business, and so fortuitously, as a green, young, cocky sort of entrepreneur, I was able to put a deal together that actually worked. And when I look at it now, I don't know how I ever got away with doing deals when I was, young and naive and didn't really know what I was talking about. But this first one was an incredible confidence builder. And so literally getting that first deal done, it was, the building needed to be demolished because it was being turned into a block of apartments. So he had to move out, and it was going to cost a fortune to move into another premises. He was having a huge dispute with one of his key suppliers, which was making his business life really miserable on a day-to-day basis. And he had another business that was incredibly profitable and doing really well, that if he could focus more attention on, he would make a lot more money. So there's like a little perfect storm of shit that basically enabled him to comfortably hand this over to me, except the fact that he was going to get some jam tomorrow. He kind of got it off his plate. He got paid, but over a little bit of time. I got a business, no money down, that would add significant revenues to my business. In fact, we grew by a year's worth of revenue, a year's worth of new sales in an afternoon. And we spent nothing on marketing, I did the legals myself, just a one-page letter that we both signed. So it really was a very, very low cost, low risk kind of transaction. And it was an epiphany. It was like, shit, you don't need to run the marathon. You can just run the last 10 yards. You still get a medal. This is great. I'm going to do this again.
You did all the hard work. And I read that story. And I read about that story. And when you say in that story was interesting is that he was asking for a number up front. And as you weren't able to get that number up front because you were just starting, he kept coming down on that number, right? So how do you, I'm sure now it's different, obviously. It's, you've done on 300 transactions, but how do you realize what the right number is? And if the number is zero, like, how did you start to realize, hey, these people in a position? And it's interesting, by the way, because as I was studying you, I was listening to a story about Carl Icahn this morning on how he tried to buy Dell. And, obviously he's the optimum of what we've seen takeovers, but like, it's interesting, like, how do you come up with a price that you feel like is right? And is it just a waiting game? Is it just a patience game when you're buying a company?
So look, I'm the least patient person in the planet, and patience is an absolute virtue in the business that I'm in. Deal fatigue can get you amazing deals. I'm just no good at playing that particular set of cards though, because I just get too impatient myself. But look, Carl Icahn is a no money down deal guy. He, leveraged buyouts were his thing in the 80s and 90s. He pulled off huge leverage buyout deals, funnily enough, mostly using junk bonds. So mostly issuing debt against a company you don't own yet to raise money to go and buy that company. And funnily enough, I've kind of reinvented the junk bond acquisition model because junk bonds became very, very popular. And because they became so popular, there are now hundreds of thousands of companies that issue this paper. And that's made it very hard to actually then go out and sell the bonds. They're very hard to sell. So we actually use junk bonds, or they're actually called high yield bonds. We've branded them extra bonds, exchange traded acquisition bonds. So we use a strategy we call extra bonds, which is where we do a bond issue on behalf of a company, and we use those bonds like a currency. So instead of raising money against the bonds and then giving the business owner cash, we actually give the business owner the bonds. And that way you cut out the intermediary, so you have no cost of distribution. You also don't have to compete with other bonds when it comes to things like coupon payments and interest payments on the bonds. You can just pay a sensible rate, 2 to 3 times what they would get from a CD, and they're happy. And so we've completely kind of reinvented that way of doing deals. And I've done probably 12 deals in the last 18 months using these extra bonds. Tens of millions of dollars worth of value has been created using these extra bonds. And it's basically a currency you create yourself.
So that's interesting. You basically recreated in a different form what was been used for years and years, and you just created it in a new way. And this is straying off topic a little bit, but does crypto or anything like that come into play with that? I mean, is that exchangeable assets that you'll use to buy companies at this point?
It doesn't at the moment, but I mean, certainly in the Web3 space, doing a roll-up kind of proposition using a cryptocurrency would definitely be an interesting concept. So the idea of effectively doing a crypto-based roll-up. I mean, look, I play quite a bit in the traditional capital markets because I think small businesses don't normally get the benefits of those capital markets. It's also regulated. So when you issue someone with a bond, it's a regulated bond. There's a much higher perceived value in them receiving that. So although you've created the currency yourself and you've issued it through the company that you're using to do the acquisitions, it's delivered to their Interactive Brokers account or their Charles Schwab account or whatever it is. It sits there in that account. It's regulated. The coupon payments arrive there in cash on the allotted dates. There's an independent trustee that oversees the whole thing. So it has a much higher kind of trust level and regulatory burden, which of course you wouldn't get with a kind of a crypto Web3 sort of solution, but you can probably emulate it in some other way, having a smart contract linked to some assets or something that did something interesting. I'm sure, but that's maybe that's next year's game to play.
You made me think of a telecom, and I'm kind of jumping ahead here, but when you made me think of telecom, as you said, everybody kind of had a telecom store, and then the bigger guys came in and they started buying everything up. Do you see any similarities in other industries now? Because when you said that, it made me think of cannabis, to be honest with you, in some of these places where that's becoming legal. And it made me think of, what is your thought about the NFT space at this point now? Well, all these NFTs being put out there. I don't, I don't know enough about it, but it just seems like it's hard to find.
Yeah, it's hard to find someone that doesn't have an NFT project right now.
Exactly.
Yeah. So no, I think you will see a lot of that. Pretty much every industry does the same thing. I mean, you look at the dot-com boom back in the 1990s. There were thousands of these dot-com companies. Now there's a few companies that represent the largest companies in the world. The kind of leftovers or the hangover from that. I think you're seeing the same thing in crypto, which there's a million different options, and they'll distill down to a few. Ethereum's clearly very dominant, and there's a few others that also have that potential to be quite dominant in various different areas, whether it's around gaming, whether it's around supply chain management type solutions, and applications that are useful to people, basically. So yeah, absolutely, cannabis got very fragmented. But look, there's really old, well-established industries that are still incredibly fragmented. I mean, one of the most common roll-up stories you see is marketing services. The top 200 marketing companies in the world, 198 of them are roll-ups. There's only 2 organically grown marketing agencies in the top 200. So, and the top 5 are all roll-ups. So, with WPP being the biggest, and then, Omnicom, Dentsu, Publicis, all those guys. So it's very, very common to do it, in that industry, and it's a very well-recognized model. And there are tons and tons of smaller groups. And you know, it's kind of like prostitution, isn't it? It's the oldest profession. So,
when you look at industries, I mean, did you? You've bought so many companies at this point now, but did you have something specific that you specialized in, and then
yeah? So when I had a telecoms company, I only looked at telecoms companies, and I felt that I needed to stick to the knitting. I'd be able to empathize with the target much more easily. And then I realized actually that motivations in business are very similar regardless of industry. And so after I bought the telecoms company, I bought an IT company. Now that's not a huge stretch because IT and telecoms cross over in so many areas. And then I bought a call center, and if you think about a call center, it's kind of a hybrid of IT and telephony. So it's kind of like it was in the right sort of zone. And then I just went off the rails, and I bought a music school, a health club and spa, a cooking school, like a whole bunch of different things, because I realized actually, you know, business is business to a great extent. And being that I was behaving more like a shareholder than an operator, actually, if you understand what the business does, it can be quite dangerous because you get sucked into the operational involvement of that business. If you behave like a shareholder, you know, you ask the stupid questions, you figure stuff out, and you're focused on selling the shares, not selling whatever it is the company sells. So, you know, if you look at the shop, the products on the shelf in this case are the companies, not the shop. So it's shifting to that kind of shareholder mentality. What can I do to increase the value of this company? I increase the value of the shares, and then how do I sell those shares or sell that business to the next person to create a capital event for myself? And so therefore what goes on underneath becomes less important. There are certain things you do that create value, but those are broadly similar across a range of businesses.
That's a really good point. I always say that, and this is my life too, of businesses that I've purchased, is that every business sounds great, right? Until you actually get into the business, or go talk to somebody that's been in the business for 10 years and be like, you don't want to be in this business. So you're almost like, that's a really, really good point that I never thought of. Like, you're almost better not being in the business every single day and just working top on and thinking like a beginner and asking the dumb questions. Like, what exactly is the point of this? So you kind of just, and I want to mention also that you have basically a school. Harbour Club is essentially a school where you have almost 2,000 members at this point now, where you're teaching people how to do this, correct?
Yeah, it's a global community of sort of deal makers. Yeah, and it was born out of this idea many years ago. I know there's lots of courses around how to buy and sell businesses, but most of them are people that don't really buy and sell businesses. They're very good at selling courses. But what many years ago, because I got a bit of a name for myself for doing these kind of deals, and particularly people would see me do a deal in their industry and assume I was like an industry expert, and then realize I wasn't, and then wonder how the hell I did this deal in their, you know, buying one of their competitors, which they would have bought if they'd known that deal was available. And so I used to get all these people asking me to do consulting work or to come and be a non-exec for them or something like that. And for me, I'd just rather put a gun in my mouth, frankly. Why on earth would I go and work for someone? It made no sense.
I don't blame you, actually.
So then after a while, I figured, actually, instead of telling these people to go away, I could actually teach them what I know, and we could also then share best practice between us. So in a community level, you can test stuff in better ways, you can try new ways of doing things, you can find more opportunities in terms of putting several companies in the same industry together and this kind of thing. So back in 2009, I did the very first Harbour Club 3-day kind of brain dump on people, and then started building this community. And we've never gone out and done the kind of rampant run to the back of the room kind of seminar sales approach. We've always been a sort of a quieter player. We have no upsells. We don't. There's no gold, diamond, platinum club or something they can join. It's literally a single membership, and they're part of this community. We have an app. Everybody shares ideas and deals, and there's lots of user-generated content that goes in there around new sourcing techniques that people have tried that have worked, or different tactics that are working in a particular way. And it's just an awesome community, and it's actually really helped me in my own deal making, because it kind of forces me to innovate constantly, and to try new things and to keep pushing the boundaries more. So I'm sure it's made me a much better deal maker over the years. Plus, I do loads of deals with the members. So we often do deals.
Are you doing a lot of deals with members?
Yeah, absolutely. So in any given year, it'll be at least 8 to 10 deals that I will do in conjunction with members of the Harbour Club. So, significant. We're talking tens of millions of dollars worth of value. So yeah, it's great.
The other thing is, and when do you know that it's time to sell a company? Like when do you, and I saw you, I read or I listened to you say something that, unless your company's doing at least $5 million in gross revenue, you're not even somebody who's worth buying at that point, right? Like you have to be doing at least 5 million to get to a point where it's a selling point. So how do you know when buying into a company, when is the right time to sell? I mean, I'm sure you never sell at the total top, but you have to be close to it, right?
Yeah, never try and timing is a fool's game. You'll never get timing right. I mean, you do, but by accident, not by judgment. I love the expression, "I've got balls, but none of them are crystal." So anybody that tells you they know what's about to happen or anything else is talking shit. And if you ask any entrepreneur about their business, well, next year is going to be their best year ever. I have never met an entrepreneur that isn't going to have the best year of their entire career next year. So, of course, why would you sell this year when next year is going to be your best year ever? And what I've learned is that whilst you believe next year is going to be your best year ever, 9 times out of 10 you're wrong. And it might be a good year, but it might also be a pandemic. Or a global financial crisis, or losing your best customer, or Google coming into your market, or Amazon coming into your industry. So there's lots of things that can go wrong as well. And so actually, I've got so cynical in my medium age that I now think the best time to sell your business is now. If you think next year is going to be your best year ever, buyer's going to fucking love that. The number of times shareholder value has been destroyed by people waiting before they sell and then it being worth nothing. I've seen this happen hundreds and hundreds of times. You should always be courting potential purchasers of a business. It's a healthy thing to do because it makes sure that you've got everything together, that your data room is up to date, that if you're sale ready, then your business is optimized. It's doing the best it can do. So it keeps you on your toes. And of course, if an offer comes along, I think too many people, because we have this traditional idea of retirement, which is work your nuts off until you're almost dead and then try and live off what you made. I think people try to take the same approach with business, that they need to keep this business for like 30, 40, 50 years or until it's worth $1 gazillion. Actually, entrepreneurs have tons of energy and tons of ideas. And if you sell one now, even though you might get 6 figures or early 7 figures for it, so it's not necessarily a life-changing amount of money, it's enough of a capital event that you now have time and money, which are the 2 things that entrepreneurs just never have. And with time and money, you can be really dangerous. You can get divorced, get an Aston Martin, do all the become an alcoholic, go that direction. Or you can become a really powerful entrepreneur because all the pressure is taken off your decision making because you've got capital and you've got the time to choose the right opportunities and the right thing to get involved in next. And I would say once you've done a startup, the startup is a rite of passage. It teaches you so much about life, about business, about humility, about your own self. But once you've done that once, why do a startup ever again? Why not buy a business without using capital that already has a website, a name, a product, some staff, it's delivering something, it's got revenues, and start from there. Whether that's to use that as a vehicle to go and acquire more companies, or whether it's to create more shareholder value and sell it and create another capital event, or whether it's to use it to innovate a product idea you had in the shower, but instead of doing a startup around that product idea, use the company that you've acquired to drive that idea into reality. I just think that once you've done that rite of passage of startup, next time start a few rungs further up the ladder. Don't do that 3 years of blood, sweat, and no joy. It's great the first time you do it. The second time, it's less fun.
No, and you're right. I think startups, you're going to see all the problems. You're going to see all the stuff they went through to build stuff that in retrospect, and even with a startup, sometimes you do a startup, you're 2 years in, I was like, I wish I would have done this differently, but they're afraid to go backwards because they're so far in already. Like, I think it's hard to make a decision. So I really agree with that. You know, I know you got into holding seminars, right? And the way you got into holding seminars is you bought a seminar company that wasn't doing well. And you looked at it and you're like, well, this doesn't make any sense. And a lot of what you say resonated with me because these people who are selling courses a lot of the times haven't done anything in the course, right? And I was to write a course forever, and I kept going. It was like, yeah, I know real estate, but I'm not the best real estate guy. There's 100 guys you should listen to that know more than me, so I don't feel comfortable writing that course, right? And now I've gotten to more of a specialty thing, and it makes me feel more comfortable about it. But when you got into that, did it motivate you? Like, I want to show people what really, like, some real substance, because I think a lot of the problem I see in the social media world is that the people with substance don't talk enough, right?
Yeah. So the challenge with most of the way the traditional seminar model works is obviously you teach them just enough to be dangerous, but not enough to be effective, and basically that creates an anxiety in the customer that means that they feel like there's something missing, and then you sell them the something that's missing. You have this upsell to the mastermind course or the platinum club or the whatever it is. And people buy it because they feel like they're not quite ready yet. Whereas actually, whenever you do something new, you're never going to be ready. You have to start before you're ready. No one, you know, you're not a perfect tennis player from reading a book about tennis. You need to get out on the court and hit a few balls around. And it's exactly the same in this business. You need to go out and meet some entrepreneurs and talk to them and try and structure some deals. And you're going to fuck a few up and you're going to learn a few lessons along the way. So we're kind of just realistic with people that this is the journey you have to go on. We can give you all the knowledge and the information and some cool tricks and hacks that you can use along the way, and some things that work and some things we know that don't work. But ultimately, you're going to have to go out and do this stuff for yourself. You're going to have to go out and, you know, actually go and meet with some people and start to take some action to learn. And so our seminar is more like a fire hose of information over 3 days that's completely overwhelming. And then there's a kind of 12-week follow-up afterwards where we actually just encourage people to take action and take those first steps and those first things they need to do. And then there's a much wider community where there's lots of free groups and meetups and things like that people can participate in, to, again, all focused around getting them to actually take action and move things forwards. Plus, there's a whole bunch of members doing really, really well who are constantly rubbing your face in it as to how great they're doing, and try and guilt you into taking some action, you know. So.
And part of the problem I see with this stuff is like I went to Tony Robbins one time, it's years and years ago, and I went to Tony Robbins, I was like, this is great, but what are you doing when you leave? Like, you know, you can run over hot coals, but if you leave and do nothing, then you know, and everybody's always motivated when they're there, and they're motivated the day after, but are you motivated a month later or a year later? And I think that's the problem I always see with this stuff.
Yeah, so I mean, lots of people do masterminding courses because it keeps that momentum for people. We have masterminds, but they're free. They're, you know, member organized ones. And the biggest thing I think that comes out of those, because I mean, it's not necessarily a knowledge pool. It's actually just an accountability thing. It's like having a personal trainer. You know, you don't eat a fucking massive burger and then go and train with a personal trainer. So it creates that accountability because you know you've got to go and look the guy in the eye the next day. And I think it's the same thing learning anything. If you can add accountability to what you're doing, it just keeps you taking those positive steps forward on a daily or weekly basis, because goals are one thing, chunking the goals down is great, creating habits is great, but ultimately we're all stuck being human beings, and human beings are notoriously unpredictable creatures, and accountability seems to work for a lot of people.
I love that. I tell people all the time, all the stuff that I'm not good at, I find an accountability partner for, so I have no choice. You know, and dieting isn't great for me sometimes, so I find an accountability partner that I have to check in with weekly. So I think that just having an accountability partner, and one of the things that I heard you say that I thought was the best thing you possibly could have said ever is how happy you were about the amount of millionaires you had created, right? Like that, and like that's the real substance. And I tell people all the time, like, I want everybody to make money around me. I don't mind stroking checks. I like everybody. I want everybody to prosper. How are you doing that? And like, is it a mindset thing? Is it a culture thing? Is it an information thing? Like, how do you feel like you're helping create these other millionaires around you?
Yeah, so I mean, one of the key things is trying to get entrepreneurs to focus on their own wealth. So entrepreneurs tend to be really obsessed with product and team and sales and marketing, all those things I talked about, but actually not very good at creating wealth for themselves. And so I try and just shift mindset around creating shareholder value, creating capital events, deploying the capital from those capital events to generate genuine passive income. And I'm not talking about scammy internet marketing type products. I'm talking about traditional banking investment type products that generate, genuine while you sleep passive income. And so we embed a lot of this into the Harbour Club community and the course and everything else to try and get people to focus on wealth, because I genuinely believe that entrepreneurs are the change agents in society. They're the people that are going to fix most of the world's problems, and they're going to solve most of the challenges that we face as humanity. The biggest challenge we have is that entrepreneurs don't get wealthy from running businesses. And so they get stuck sometimes for decades in a business that will never really make them wealthy. And so by just shifting that mindset around some, basic wealth creation around being an entrepreneur, I think can be a game changer, because once they've created wealth for themselves, they're great problem solvers. The problem they're trying to solve right now is, how do I create financial security for myself and my family? When they solve that problem, then they'll focus on homelessness or alcoholism or cancer or whatever's affecting them in their lives. They'll go on and solve. And I trust entrepreneurs with money to solve those problems way better than any NGO or government or any other institution. It's not a great custodian of our money.
That's powerful. And some of the younger people around me that are entrepreneurs or want to be entrepreneurs, I always tell them, you can preach all you want, but until you can talk to people from a place of financial security, you have really nothing to offer them. Like if you can't,
you can't help the poor by being one of them.
That's the problem. And so you have to get yourself to some place of financial security. However spiritual you are, you got to get to some place of financial security, because you really can't pull anybody with you until you get there. And I think that's the thing that's so misunderstood. And a lot, and I think social media twists that a lot also, right?
Yeah, I talk quite a bit about private wealth banking on my Harbour Club stuff, and I've published a bit of it on YouTube and things like this. And private wealth banking is the bank accounts that are available if you've got 10 million plus net worth, 3 million cash to deposit. And it's a step up, complete game changer in terms of the products that you're offered, the way that you can invest, the leverage that you can access. I can draw down cash at 0.7% a year. And use it for anything, whether it's a property deposit or to lend to somebody else. I can invest in institutional grade funds, which have more like ETF style costs. I can invest in derivative products that aren't available to the general public, but pay double-digit returns and have incredible levels of protection built into them.
Things get cheaper when you get more money in the bank.
Exactly. Yeah, everything's free when you're rich. It's great. It's, I'm not joking either. It's really, really insane. Right. I often joke with my wife. Our calendar is completely full of, because it's coming up to Christmas, everyone's doing these big black tie events and balls and stuff like this. We're invited to all this stuff for nothing, It's like, I would have killed for a free meal 20 years ago.
No, but it's really true. And you're right. I find now more than ever that people come to me with all these things now that they want me to invest in or whatever it is. And you have to sift through a lot of that stuff too. But
yeah.
I had points in my life when nobody brought me any opportunities and nobody even wanted to talk to me. So you're right. Like you have to get to a position of some kind of financial wealth, and a lot more comes to you with that.
Yeah. But what's interesting is there's a lot of wealth kind of gurus who are always talking on the internet, and you can just tell they haven't actually made any money, because otherwise they would know this stuff exists. And clearly they don't. They're parroting somebody else's stuff.
It's almost like you hear their tells, right? Like you could hear. So what are you working on now? What's attractive to you now as far as your business, or Harbour Club obviously continues to grow, and I like that you have it as community because it organically grows almost then, right?
Yeah, but look, my life is doing deals, and the Harbour Club is the hobby, the sideline, as opposed to I think most of the other seminar operators where the seminar is their life, and they really try and do a deal to create some credibility around it. But no, my main thing at the moment is taking companies public and then using those public companies as acquisition vehicles to go and buy other businesses in the same sector or do roll-ups in various industries. So we listed a company 2 years ago. At the end of 2018, it was the fastest growing small cap company in the whole of Europe in 2019. It's done 27 acquisitions since we listed it. We're just listing a group of franchisors at the moment, which I'm very excited about, which is acquiring franchisors and then licensing those businesses across other territories into other countries and things like that. We've got a really cool solar hydrogen IPO that we're doing at the moment, which may well actually not be news by the time this gets published. So I think it should be completed any second now. We're in this really, for those that, I don't know when you're listening to this, but we're in this awkward phase. We've just had Thanksgiving and it's Christmas next. So from Thanksgiving till about the 15th of December, everything's on 50% speed. And then from the 15th of December, everyone's fucking drunk.
Yeah, you're right. That's it. Stop.
It's like, and so, yeah, we're doing a Harbour Club on the 15th, I think it is, 15th, 16th, 17th. And then I'm done. I'm locking the doors. The family are coming over, and that's me gone for the year. So I'm not making that mistake of trying to get anything done in that last.
No, every year I make the same mistake, and then those last 2 weeks of the year, I'm always like, why did I do this to myself? Because then I'm in the middle of it. I'm doing nothing, and I'm sitting here. What do you now over the last 2 years, especially during COVID, kind of taking companies public changed a little bit? I feel like somewhat. Has that changed at all your strategy or anything like that?
Well, the great thing is now you don't have to go there. You can do it on Zoom.
That's true.
So we did do a virtual bell ringing on one of them, but no, the market's actually really buoyant. So M&A in 2020, M&A was up like crazy, and certainly on the acquisition side, I think exits were a little bit tempered. Not so many. There was emergency sales, if you like, distress sales, but not so many people. Selling. I think total exits that we recorded, and bear in mind, a lot of our members don't like to talk about exits because they don't want people begging them for money and things like that. But of the ones that volunteered the information, I think we did a little over $70 million of exits in 2020 in the community. 2021 is difficult to see how that's going to look at the moment. I would say personally, I'm a little bit down on 2021 versus 2020, but 2020 was an exceptionally good year. So being down is actually not bad. It's still pretty good, but I would say we've got a really buoyant pipeline that we've created in 2021, but it's been a little bit harder to close people this year. The summer went completely missing. I think people hadn't had a holiday for 2 years. So literally, I think from July to September, everybody disappeared. Yeah, it was like a big void in the middle. Now it seems like everyone wants to get stuff done by the end of the year, but you just have the feeling it's going to roll into Q1 just because of where we are in the year. So yeah, it will be really interesting. So we publish a report every year that's audited by a big global audit firm into exits in the community. And this year, for the first time, we're not only publishing the exits, but we're also publishing like a survey around people's confidence and business, community confidence and stuff. And we're in most mature economies. So we're in, Canada, US, UK, Europe, Australia, New Zealand, Singapore. So we should get a really good feel for how things have been affected globally, because you have to remember every country's got a really different response to what's going on in the world right now. I mean, Singapore still has quite strict restrictions. New Zealand and Australia still have quite strict restrictions. So it'd be really interesting just to see what the general thoughts and feelings are in places like that.
Yeah, I mean, you're right. And now there was this news of this new variant this week, obviously, which
sounds like a Transformers villain, doesn't it? Omicron.
It's like never ending. But I mean, I think a lot of people are sitting around waiting for something catastrophic to happen almost with the markets, with one of the markets. I mean, I don't foresee that right now, but I've been through crashes before and I didn't see it coming necessarily either. So, I mean, what do you think? As far as 2022, 2023 looks like?
Yeah, look, I would go back to my earlier statement that I have balls, but none of them are crystal. So my portfolio right now is positioned, I would say it's weighted towards an inflationary environment. I know the Fed is saying it's transitory and the EU central bank is saying it's transitory, but I can't see that. I can see that there's definitely been a spike in inflation due to supply chain issues, which should clear themselves. They should evaporate. Having said that, there is still tons of extra money supply. People are having to rethink the way they buy stuff. There's geopolitical problems with China. There's electricity problems in China. I've got friends who have factories in China that only have 8 hours of electricity a day at the moment. They used to run 24/7. They have their electricity turned off for 16 hours a day right now. That's a huge supply side squeeze. Foxconn has just opened up in India to be able to try and keep production going. So you've got Chinese manufacturers moving out of China now in order to survive going forwards. So there's a lot of things at play in the market which all have the potential to be inflationary. But again, you don't want all your eggs in one basket. If there's a market collapse is by definition a deflationary episode. So asset prices go down. So you always have to have a little bit of that in mind as well. But yeah, most of my positioning is towards an inflationary environment. Let's see how it all plays out. My portfolio looks like I'm an 80-year-old man, as my bank manager points out to me quite regularly, because I have a lot of income generating assets in there, and not a lot of growth. I've been doing
the same thing. It's hard some days looking at that, and when you're seeing these huge spikes in some of the stuff that's not like that, especially with the technology. It's hard, but I agree with you. I just feel like I'd rather be safer now and know where I stand than have huge sways one way or the other,
Yeah. You can take 10 grand, go stick it in a meme coin if you really feel if you've got the FOMO thing going on.
I gotta tell you, the one thing I haven't dove into is the NFT stuff, and crypto I'm in somewhat, but not aggressively. And I just don't. I need stuff with track history, so I haven't really jumped in all the way on this stuff yet.
Well, so I'm an art collector, and actually I financed the largest Banksy exhibition in history called the artofbanksy.co.uk, which is in the UK.
Awesome.
So I'm just a financier, so I just put the money in. I'm not like connected in any other way, but yeah, I collect a lot of art myself, and so the NFT space is really interesting because more as a kind of provenance and chain of custody approach to art, rather than necessarily these JPEGs of a fucking monkey or something that somebody's which I think basically is money laundering. I think it's just a way of getting a few $1 million from one country to another. I'm not sure there's it's either the bigger idiot theory, which is you just need to buy it and find a bigger idiot to buy it from you, or it's something, or it's a nefarious movement of money from one jurisdiction to another. But no, in the real art world, I can see combining physical art with the chain of custody and provenance of an NFT connected to it can be quite an exciting opportunity. And certainly, one of the projects I have for next year is the Democratizing Wealth Foundation, which is around this idea of trying to fix global inequality through entrepreneurship. So one of the things that we're looking at there is linking it to art. So the people who want to pledge to the foundation would pledge art, and then that art would then be distributed by way of physical and digital to people that wanted to contribute to the foundation. Selling a physical product or selling NFTs from a legal perspective are classified as property. So selling property is a much easier way to raise money for a foundation than taking donations, because taking donations is very legally complex in many jurisdictions around the world, whereas selling property is very straightforward around the world. So it looks like it could be quite interesting.
As an art collector, because that brings the other question to me. I mean, you want to have something physically, correct? I mean, as an art collector, and I like the idea of connecting it to something NFT, but I would think that most art collectors want to have something physically that they can see, that they can touch, they can feel.
Yeah, but then don't underestimate the next generation and the fact that maybe their physical reality is in the metaverse and not in the real world, and so for them it is something they can show their mates.
That's true.
Whereas it's kind of their humble brag is having one of those monkey JPEGs on the wall in their metaverse. But no, for me, I love the physical aspect, of owning things and making spaces that you live in more beautiful.
Well, you've been awesome, and I really appreciate your time. If anybody, wants to know anything about Harbour Club or speaking to you directly, where's the really best place to contact you?
Yeah, just hit us up on social media. So I'm Jeremy J. Harbour on Twitter, or harbour.jeremy on Instagram, or harbourclubevents.com if they want to find out more about the Harbour Club. So yeah, just track me down on social media.
You're awesome, man, and thank you. I mean, I actually learned a lot today, so I appreciate
that doesn't. We have to teach me about real estate. I'm terrible at real estate. So
for me, Jeremy, real estate's always been something that I can make a lot of mistakes in, because over the long term, it corrects a lot of your mistakes. So that's been good for me. But a lot of what you're saying, especially in regards to entrepreneurship, people should listen to, because it's really a blueprint for kind of how to grow your wealth more than anything. And that, at the end of the day, it's what we're looking to do, instead of just growing things.
Absolutely. No, look, I think the key to wealth creation is capital events. And I think, in the real estate world, it would be the fixer-upper. You buy the place, you do it up, you sell it, you flip it, you create that capital event. But that's still capital and labor intensive, so you can't really get into that unless you've got at least probably 50 grand cash kind of kicking around. Whereas getting into business and entrepreneurship has a much, much lower barrier to entry, because you can start a business for almost nothing and you can buy a business for almost nothing. So the opportunity to create a bigger delta and get started is easier.
Yeah, it's actually more of a realistic income generator faster.
Yeah, for sure.
So that's great. Thanks again, Jeremy. I appreciate you coming on, and I'd love to see what's going on in the future, and I'm curious to talk to you a little bit more as the metaverse develops, and I need more information.
Always happy to come back. Just ping us an invite. Thank you.
All right, Jeremy. Thank you. Take care.
Cheers. Take care.
Thank you for joining us today on the Disruptors Network podcast. That was great. I got a lot of education out of it. Jeremy will continue to buy companies. Obviously, he's somebody you need to follow on his Instagram, and possibly even join the Harbour Club, which is a community that focuses on helping you buy businesses. Check out our future podcasts on Apple, Spotify, Anchor, and on YouTube. Thank you for joining us on the Disruptors Network podcast.